Amazing women out there doing it all.
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that. But we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope you all had a great weekend. It's Chuck, Mike, and Tucker with you here, and we got a busy week, my dudes and dudettes.
Both, yeah. Yeah.
I mean, look, the centerpiece is Jay Powell and the gang are going to be getting together on Wednesday, and they're going to be potentially changing interest rates, and they're also going to be giving their summary of economic projections, despite the fact that they don't have economic data that's going to be released a week later. I don't know why they don't just delay this meeting. The more that I sit here and stew about it, the dumber I think it is for a bunch of really smart people to just not push their meeting back by 1 week so they can have the economic data on which not only their decision-making depends, but the summary of economic projections, they use data that they will receive next week in their models to help explain what they think is going to happen. And all they would need to do is be like, hey, instead of having it on the 10th, we're going to have it on the 17th.
Yeah.
But they're not going to do that. I've even gone so far as to suggest that Jay Powell could push things back an additional week to get more data, in which case we could have the first ever Christmas Eve Fed meeting.
That sounds terrible for everybody.
But I've been told in no uncertain terms, no, that's not going to happen.
Terrible for Jay Powell and terrible for those who have to cover it.
Listen, if the NBA can have games on Christmas, why can't the Fed own Christmas Eve?
Yeah.
Ratings.
Yeah.
Right? The Fed would have great ratings. Or were you saying something else?
No, I was saying the Fed would not have good ratings.
You don't think so?
No, NBA and NFL would.
What if you had, okay, let's go a step further. What if Jay Powell did the halftime show at one of the NBA games on Christmas? I think he can juggle.
His pyrotechnics going off next to him at the halftime.
He's wearing a
show.
red and green tie and it's a wardrobe malfunction.
Yeah. It's only
bunch of dancers around
just
him.
Purple fireworks.
And he's just talking normally.
Yeah. Well, we believe that the balance of risks has changed. And
There's about 150 Americans that would find that funny.
And we're
two of them.
I think there's three of them, and they're in this room.
Yeah. There's three of us.
It's a pretty narrow joke.
In any case, so we do have the Fed this Wednesday. We get the job openings and labor turnover survey data tomorrow. That's the JOLTS report. So that's kind of exciting, but this is the September one. I'm not clear. I think the October one's included here as well, but it's unclear exactly how they're going to split them up, if it's going to just be one release or two. I just don't know. Thursday, we got initial jobless claims, and so that's kind of what we've got on tap for the week from an economic data perspective. On the earnings side of things, we got a couple movers and shakers as well. Oracle, who, remember, had that big 40% jump after their last earnings report back 3 months ago. They've given up all those gains and then some, so I think the market's going to be watching pretty closely to be like, hey, is any of that $300 billion in potential revenue turning into real revenue? Mm-hmm. That'll be, interesting for them to say. Thursday, we've got Broadcom, who's all tied into that AI space. Broadcom, again, you might have been sleeping on this. They're a $1.6 trillion company.
I was going to say, it's amazing how little we talk about the 6th largest company in the world.
Well, can we talk about why that is?
Why we talk about them very little, or why they're so big?
Both, in my opinion, because I think they're tied together, quite honestly. The first is they're so big because they are really, tied into the AI ecosystem.
Sure, they're a mini NVIDIA.
Which is great. The problem is they're a really mini NVIDIA because NVIDIA is doing right now about $200 billion in revenue, and they are growing their revenue 60% year over year. Broadcom, on the other hand, is doing $60 billion in revenue, and they are growing their revenue 22% year over year. I'm just not sure that that's really a $1.6 trillion company.
Beyond all that, they also happen to report their earnings 2 to 3 weeks after NVIDIA does, and so they're old news by the time they get to market.
They're trading 32 times sales, 102 times earnings. And again, not to say that they're not insanely profitable. They are. They made $18 billion on the $59 billion in revenue that they've done. Mm-hmm. So, like, I'm not saying, like, you guys run a bad company. You don't. Like, if there are any Broadcom employees listening, it's not like I'm not beating up on you. I'm kind of just looking at the market being
You're beating up on the stock investors who are.
Well, I'm sorry, but it's just like when I think of trillion-dollar companies, you got to be doing at least $100 billion in sales. I'm sorry. Like, I don't make the rules, but I just did.
You did, yeah.
I did. And they don't quite get there. But they're still a $1.6 trillion company, so they are important. And so we're going to discuss them later this week.
All right, so Wednesday Fed meeting. Definitely the event of the week, although we could see some fireworks out of the media space. What are we looking for from this uninformed Fed meeting? Again, we call it uninformed because they're getting a bunch of more current data on the state of the labor and inflation market the week after their Federal Reserve meeting due to the government shutdown. But what are we to anticipate here? Because the expectations, to be very clear, have changed a lot over the course of the last, I don't remember when the Williams speech was, but last 30 days, let's call it.
Yeah, so where I think we are going here is I think that we are going to get Jay Powell foo-foo.
Like bunny foo-foo?
Yes.
Okay.
I think we're going to get a rate cut.
Yeah.
And then Jay Powell is going to hop along the forest and bop us on our heads and tell us, I'm not necessarily cutting rates in January.
Which is exactly what he did after the last meeting, and yet they're cutting rates.
Yes. I think that's what we're going to get. It's going to be a hawkish rate cut is, I think, the expectation that I have. And so that's kind of where I think we're going with this is, yes, but Powell's going to come out. He's going to say, the risks to the employment continue to be present. As such, the committee is, going to cut interest rates by 0.25%. And I'm happy to take questions. And then someone's going to ask him, so what are you going to do in January? Well, we're still assessing, but January is not necessarily a full go. And there very much is a situation where we could see not cutting rates in January.
Okay. Everybody listening, why should they care?
Quite honestly, I don't think they should.
Yeah. I mean, best case scenario,
one
best
rate
case scenario
cut is not going to
cut.
make a difference.
It's not likely to bring down mortgage rates. We've seen that occur now, quite frankly, over the course of the last 18 months, where Fed cuts rates and mortgage rates either don't move or move upwards. If you've got those, I keep talking to people with all this money in CDs that have been very excited over the last 5 years because for a decade they could earn nothing when going to the bank. That is continuing to deteriorate. Latest I've seen, CD rates in the, if you're lucky, 4% range. That's going to continue to come down after the next Fed cut. We've also not seen credit card interest rates really move on the Fed cutting cycle. Number of different reasons for that, but that hasn't really been a contributor. The main beneficiary I can think of this continued rate cutting cycle would be equity market investors. And again, I don't expect to see any big movements in stocks the day of the announcement, but clearly lower interest rates benefiting that one cohort.
And by the way, mortgage rates probably moving back up again today. 10-year Treasury selling off back up to 4.18%. And so that's probably going to push the national average for a 30-year fixed rate mortgage back up above 6.3%. So, yeah, I mean, look, the Fed has cut interest rates, the short-term Fed funds rate, by 1.5% since last September. Despite that, mortgage rates are exactly where they were then.
I mean, we are very close now to the end of Jay Powell's term, right? We have, let's see, this 1, 2, 3, 4 more meetings that Jay Powell is going to preside over.
Yeah.
This one this week and 3 others in 2026. Does that shift anything around, right? Like, I know there's been immense pressure from the White House on interest rates. My personal view would be if you're Jay Powell, there is no pressure to do anything from the White House. You're out anyway in May, and the White House has made it pretty clear that, absent some pretty extreme stuff, they're not going to attempt to remove you.
Yeah, I mean, I think Jay is gonna BJ. It's who he's always been. I think the more interesting question to me, because I don't think there's if Jay Powell were going to be swayed one way or another by threats of his removal, he would have been swayed already.
A year ago. Yeah.
He would have been. I think the interesting question is Jay Powell remains on the Board of Governors through January 28. Does he want to remain on the Board of Governors? Because remember, the Board of Governors cycles through the Fed Open Market Committee. Does he want to continue to vote on the Open Market Committee after he's no longer chair?
Yeah.
It's a hard maybe.
Be an interesting dynamic.
My guess is he probably does not want to. Here's the thing.
That would seem in keeping with the Jay Powell we know.
I think that he very much wants to finish out his term as Fed chair because I think he sees that as important. I suspect he kind of just wants to move on from the Fed at that point and not have all of that hanging over him.
He's got to make his speaking money.
And then he can go out and make... What do you think the going rate is for Jay Powell these days? I mean, we've talked in the past...
For any former Fed chair...
Well, Bernanke 10 years ago was getting $250 a gig. So was Yellen.
Okay.
So I'm guessing...
Yeah, with inflation, you're up to 300, 350 a
No,
speech.
you only do round numbers as a Fed chair. I'm guessing it's kind of like, how when they do the annual adjustments to 401k contributions, they only go up in numbers of 500 or 1,000?
Yeah.
The question is, does Powell get 500k yet, or is he still at 250?
Good question.
That's kind of where it is. 500k for an hour's work?
Not half bad.
Makes me want to be Fed chair. Let's take a quick break. When we return, I told you this one was going to get juicy. We got the next leg in the Netflix, Warner Brothers Discovery, Paramount saga, and it's a juicy one right after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit DAV5K.Boston. That's DAV5K.Boston.
Nobody wants to think about estate taxes or nursing home costs, but if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. If you didn't have a chance to participate in this year's race but would still like to support our great American heroes, please visit dav5k.boston. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
All right, so this morning, I want to say it was maybe like 8 a.m. or so, somewhere in that range. Paramount launched a hostile takeover for Warner Brothers Discovery. This comes several days after Warner Brothers Discovery has reached an agreement with Netflix to be acquired by them. Now, a hostile takeover is not Hans Gruber walking into Nakatomi Plaza trying to get a bunch of bearer bonds. It's not
true.
that.
It's slightly different.
Okay. What is a hostile takeover, Michael?
It's when you go to offer to buy a company, and rather than the traditional route of the board or the CEO accepting or denying your offer, you bypass them and go straight to the shareholders.
You're saying, yes.
I am going to put this vote to the vote of your actual shareholders, which, the board is not the majority in most cases, and so they try and actually stuff the deal down the throat of the board. The initial deal that was agreed to, the Netflix buyout, was agreed to by the CEO and the board. It was a little bit less than the Paramount deal, but was not for the same group of assets. So the Netflix deal was mostly cash, but some stock offer at $27.75 per share, but it was for everything but the cable network business of Warner Media.
Which you could make the case that maybe that doesn't have any value or might have negative value depending on how you view it.
No clue what it's worth.
Yeah.
The Paramount deal, on the other hand, is the entire company at a slightly higher price, and when you take into account that it's an all-cash offer, they point out that, because it's all cash, it's $18 billion more in cash to shareholders. I would also think that if you're buying the entire company, it happens a little bit faster than the Netflix deal, where they first have to spin the company into two and then complete the acquisition. But I don't know, and I don't know how much more that is worth, and nonetheless, they are going to try and take this to shareholders.
So we now are going to have, again, just what is probably going to be a pretty ugly public battle between these two companies to try to buy Warner Brothers Discovery.
You could see the offers get upped further. Paramount also pointing out that they think that they can get a deal past legislative concerns, antitrust concerns, better than Netflix can, and there may be some truth to that. The president has been pretty vocal about this, saying that he has concerns about the Netflix deal and has some pretty close connections to the Ellison family, who runs Paramount, which shouldn't be a factor, but pretty clearly is.
The other thing that you could see here is a proxy battle, which proxy battles are again, you don't really see these that often anymore. Like they happen occasionally, but basically what you also, like, the fascinating thing, Paramount could go to Warner Bros. Discovery shareholders and be like, hey, do you not like your board? Because we don't like your board. Why don't you vote to replace your board and then get a friendly one that would then accept the offer from Paramount in there? So you've got a couple different things that you could do here. It's,
by the way, some experts out there, and I don't know how they run this, conclude that Netflix's deal is worth closer to $31 or $32 per share, given that the existing shareholders would continue to hold, again, a bit of Netflix plus the existing bucket of assets that won't be part of the acquisition. Again, I don't know how they come up with these numbers, but that is the estimate run by some.
And the thing that you are going to run into pretty quickly is if these prices need to be upped. Like if you see, these companies trying to one-up each other on the pricing side as part of this, there's not much room to maneuver. And what I mean by that is, let's look at Paramount just as an example. Paramount Skydance right now, if we, again, just pull up like their financials, did $28 billion in revenue for the last 12 months. They've got $3 billion in cash. They have to borrow north of $50 billion in order to make this work as it is. They have $56 billion in debt commitments that are lined up. Eventually, and again, you can bet in the media world, I'm guessing that the debt that you are, issuing to do so is probably not at 4% for the next 10 years.
Hell no.
You're probably talking, in this environment, high single, low double digits for your interest rate. So let's call it, 10% to make the math easy. Now you've got $5 billion in interest expense that you are throwing at this each year, just like that. Netflix, despite being a $400 billion company, again, by market cap, they're a $406 billion company. They only do $43 billion in revenue a year as well. They have $9 billion in cash on hand. These are not companies that are like Apple and Google with billions to just throw around. And in the media landscape that can change, it can be dangerous if you pay too much. Quick break, Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. you can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Fed meeting week is upon us, and markets today are pretty quiet. Traders also waiting for job openings data due out tomorrow morning, in addition to more tech earnings from the likes of Oracle and Broadcom. Right now, the Dow is down about 0.25% or 119 points. S&P 500 is down 0.1% or 10 points. NASDAQ is edging only 2 points higher. Russell 2000 is up 0.33%. 10-year Treasury yield up 4 basis points at 4.188%. And crude oil down about 1.33%, trading at $59.25 a barrel. In a hostile takeover bid, Paramount is now offering an all-cash $30 per share deal for all of Warner Brothers days after Warner agreed to a deal with Netflix. Paramount argues its best offer is better for shareholders and more likely to be approved by regulators than the Netflix offer. Paramount stock is rising 4%, while Netflix shares are retreating 4%. Meanwhile, we have some acquisition news in the tech sector this morning after IBM announced it is buying data streaming platform Confluent in a deal worth $11 billion. IBM shares are up modestly, while Confluent stock is surging nearly 29%. Elsewhere, according to The Information, Microsoft was in talks of moving its custom chips business to Broadcom from Marvell Technology. Marvell stock is falling 9%, while Broadcom shares are climbing over 2% higher. Berkshire Hathaway announced the departure of investment officer and Geico CEO Todd Combs, who will be joining J.P. Morgan Chase. Berkshire stock is down over 1%. In manufacturer CRH, HVAC company Comfort Systems, and online car retailer Carvana are all seeing gains on the day, following news that all three companies will join the S&P 500 on December 22nd. I'm Tucker Silva, and that is Wall Street Watch.
The year of America's cranky consumer.
It hasn't been a year. Consumers have been pissed since 2022.
Well, let's discuss.
Sure.
Okay. So, if we're going to look at this, I'm guessing we're just going to look purely at consumer sentiment because that's what's referenced in here, right?
I don't know what else you would look at to determine the crankiness of the average American consumer.
Okay. So, consumer sentiment, as you note, has been bad basically since early 2022.
It's been a dog, yeah.
It's been bad since then. It had brief moments of positivity. The highest that we got was back last February and March. I don't know why that's the case. I don't look at like last February and March and I'm like, hey, like that was like a shining bright spot economically. Like it's just kind of all been the same. So if we look at this consumer sentiment data normally, which is, again, produced by the University of Michigan, it comes out once a month. Generally, the times when consumer sentiment has been bad have correlated to bad economies. Mid-1970s, early 1980s, early 1990s, 2008, 2011. Like, these were times where, again, I was alive for most of them, not all of them. But the ones where like I was alive for and I had any semblance of what's going on or at least can relate back to it, I'm like, oh yeah, those were objectively bad economies for one reason or another. And so you look at the consumer sentiment data that you have right now, and it's saying bad. Like basically historically bad. You're within sniffing distance of the worst consumer sentiment readings that we've ever had.
Yes.
And the part that's challenging to understand is that unemployment is at 4.5%, which is low by historical standards. Inflation right now is running at 3%, which is elevated relative to, the 2% target, but inflation ran at 3% for, the 1990. Like, inflation's been close to 3 before, and we haven't had this. And so the question that I think is out there is, hey, the economic data as a whole doesn't look bad. Why are American consumers being cranky McCranky pants?
Yeah.
And is it justified, I think, is the subtext of that.
By the way,
well.
the only time in the data series I can find where consumer sentiment was worse and unemployment was lower than it is today.
When?
June of 2022. And that's part of the current trend. So, like, this is historically bad voting on the economy at a time when unemployment is, historically not so bad. So, one, I think we have to start with my guess that something's just not quite right with the data collection in comparison to 1990, right? I think it's not quite measuring the same thing, is my guess.
Why?
Because every objective measure that we have of the reading on the economy is different. And when you ask people subjective questions, they're giving vastly different responses than they used to.
Here's my counterpoint.
Americans are just unhappier.
What if we are different?
Yeah.
Because I think the general rule of thumb that I have is that we are more miserable human beings than we've ever been. And I'm going to call a spade a spade.
Optimistic view.
No,
I'm good with that, yeah.
which means that every day you see me is the worst day of my life.
Today's only Monday.
So, where I'm going with this is where I think we can be uplifting then.
Yeah.
I'm sorry, I'm going to draw a straight line back to social media and the introduction of the smartphone. Because pretty much every measure of psychological stability, well-being, and happiness has declined in the last 18 years.
I don't know. See, Chuck,
you don't know? You don't know?
This reading.
Oh, you know.
Have you met people?
I know that they are miserable, and I do blame social media, but we all had Facebook and smartphones in 2017, and the data didn't break until COVID.
Because the economy was fundamentally different then. And this is the other piece that I will say. When looking at the economy, what matters is rate of change, not level. And this is something I've come to believe really, really strongly. One of the reasons people are rating the economy badly right now is, yes, unemployment's 4.5%, but it's come up from 3.4%.
Yep.
Is there anyone out there today who sits there and says the job market is objectively better for workers than it was 3 years ago?
No.
It's worsened.
And likewise with inflation, it's 3%, but it was 9% a couple of years ago. And so you've had cumulative inflation over the last 5 years that's equal to what you saw for more than a decade in the 2010s.
It's like with gas prices.
But again, I don't think I blame that on social media.
I think we generally just feel worse. All of the data out there is that people are unhappier now than they were before. Why would that unhappiness not be reflected in economic surveys also? If you're asking someone, are you happy or unhappy? And more people are saying unhappy. And then you ask them, are you happy with the economy or unhappy with the economy? Do we really think the average person is just going to sit back and go, well, I'm pretty unhappy because I spend my whole life just scrolling through Instagram looking at people who have better lives than me. But objectively, I know that inflation is not that bad right now and that unemployment is relatively low by historical standards that my parents would have been happy with. And so, yes, I'm going to rate the economy well.
In this case, can we go completely off script during the next segment?
What else do we do?
I want to talk about Australia's plan when it comes to social media.
Are they going to put another shrimp on the Barbie?
They are going to take away several shrimp off the Barbie.
Will they have good days, mate?
Let's take a quick break, and then can we talk about this next? Because Australia is going full extreme when it comes to social media with their new law, and I want to cover that next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean Travel Channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
See you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find daily interviews and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
Mike, so we were talking last segment about why everyone just in the aggregate is just more cranky than they've ever been. And the reason why we've been talking about this is that consumer sentiment data is basically at or near the worst ever recorded in the United States, despite the fact that unemployment is still what we would consider low overall, and inflation, though higher than target, still not crazy high on an annualized basis right now. And so the two hypotheses that I put out there, one, it's really about rates of change, not about levels, and unemployment's been moving up, and so that makes people upset, and prices have still been moving up, which makes people upset. And so that's one. The other that I put out there is that, look, if you look at basically happiness measurements as a whole, they've pretty much all been declining since the mid-2000s, largely in my estimation because of smartphones and social media. And so if you think people are more unhappy in general, they're going to be more unhappy about the economy as well.
Yeah, I think that's a reasonable assessment of it. And so we're going to have a new guinea pig out there for some parts of this, which is Australia going forward with a full ban on social media for kids, effectively making a law across the country where you must be 16 in order to use services such as Facebook, Instagram, Kik, Reddit, Snapchat, Threads, TikTok, Twitch, X, and YouTube. Others that are not directly social media, such as Discord, Messenger, Pinterest, Roblox, WhatsApp, and YouTube Kids, are not part of this ban, but we're talking about hundreds of thousands of kids who currently have social media accounts in Australia that are going to be kicked off, and hundreds of thousands of more who would have signed up that are going to be blocked from doing so. There's been a couple other countries that have done this. Denmark is one of them, famously. There are other places that are, talking about similar restrictions. But a big number of questions that I have, most of them center around, will we ever do something similar here in the United States?
The answer is no.
Which my answer is almost definitely not. But one, there's some big questions as to how these companies are going to implement it, because the law does not give any real firm guidance on how they should implement a under 16 ban. And so there's been talks of facial identification for
I'm
kids,
sure that'll go well.
Right, which is exactly what you want, is Facebook storing images of your 14-year-old permanently. They claim they wouldn't do that, but the other ones would be some form of identification, but we don't really do that. I don't know what Australia does. I know Denmark has like a form of ID, but if you live in the United States and you don't have a passport, if you live in Australia and you're a kid and you don't have a passport, there's no real government ID way of confirming your age. But nonetheless, they are threatening these companies with $33 million fines for violations of the policies. And honestly, while I am certain that this never gets off the ground because of things like freedom of speech rights in the United States that are tough to get over when you have social media.
Well, and that's even before you get down to the fact that we just bow down at the altar of big tech now and think that these people
All of
are
our
like
lawmakers
geniuses, despite being horribly, not great with their ethical decision-making, has been proved out multiple times.
Yeah, I mean, look, our lawmakers are bought and paid for by these people, so I think that's another reason it's not going to happen. But I actually think it's one of those issues that would have a tremendous amount of bipartisan support if our lawmakers weren't bought and paid for because of it.
And if my mother had a wheel, she'd be a bicycle.
I'm also just wondering out loud if, it took us 20 years to realize, 20 years to realize how damaging these platforms are. And Australia is going about banning them at the exact same time that they should be focusing on artificial intelligence for children and looking at bans on that stuff instead of just targeting social media right now. But I do applaud what Australia is doing. I mean, it might fail in spectacular fashion, but all the evidence points to the fact that this is just terrible for kids.
I don't think...
And I always land on, parents should be doing a better job with this, but that's pretty tough when, there's, for every parent doing a good job of policing it, there's 10 parents that are doing a crap job and letting their kids use it.
So, yes and no. Right, is kind of where I land there. If you look at the places where we've tried to make progress in the last 40 or 50 years in terms of restricting harm to teenagers, there's three big ones I think that you look at: alcohol, cigarettes, and pregnancy.
Okay.
And we've gotten much better at all of these in terms of avoiding bad outcomes. And so if you think about, just the framework for how to do this, ultimately everyone, when you're 15 years old, every single one of us would know the one person who was 21 years old who could buy you beer. Right?
Sure.
Even if you couldn't do it personally, you knew the one person who could get you beer.
Sure.
When you were 20 years old, you probably had a fake ID from someone who had given it down to you, and it's been, handed down through your friend group and so on and so on.
Sure, but do we call the changes to the alcohol laws a failure because of that?
No, but do we really think it's because of alcohol laws that we saw changes in youth drinking? I don't think so. Because, you could still... Did anyone actually have a hard time getting access to alcohol if they wanted it before they were 21?
I would say it's harder.
My entire college, call it what it was. Like, you could drink the second you step foot on a college campus.
But are you saying that the situation didn't get better because there were like hundreds of thousands of DUI deaths prior to the 21
I'm
age
saying it
alcohol?
Wasn't because of that
It was
restriction.
because of some societal change.
Like, the point that I'll make, did we do anything to ban teen pregnancy?
No.
No. We educated people and gave them more information to make more informed decisions. When you look at what's going on now with kids that are, in their teens and even 20s, and what's going on with drinking even after they're of legal age, there are fewer people drinking now than ever before on a percentage basis. And so I'm not sure that some top-down commandment works for a number of reasons. This is before you even get into the privacy concerns about how the heck do you, make sure that you're figuring out who someone is without then tracking that person and what they're doing online all over the place. And so I don't think when you look at kids with technology, any roadblocks that you put up to try to slow them down, they can get around. They figure out how to. Talk to anyone who has kids in that age, 10 to 14 range right now, and they'll tell you that no matter what blocks they put in place on smartphones and things like that, their kids figure out how to get on Instagram even though they're not supposed to be on there before they're 13. This is stuff that just happens. And so I don't think that just being able to say, yeah, we're going to, ban users under this age is going to work. I don't think that's the case, because if you want access to those things, you're going to get them, same as anything else that we ban below a certain age. What we need to do is figure out how to create the right incentive structure and everything so that kids are making better decisions. And I know that's harder, not sexier, but it is what it is, in my opinion. Sorry, I just blew up that whole segment. Let's take a quick break, and we got hour 2 coming up in a bit.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, you'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Tucker with you here as we kick things off, and we got markets selling off modestly today. Nothing crazy, nothing huge, but S&P 500 is down 24 points. Dow is off 200 points. NASDAQ is off about 55 points, so about 0.25% to 0.5% slide across major markets. Bonds selling off as well. 10-year Treasury up 0.43%. Got to do this again. 10-year Treasury up 4.3 basis points to 4.182. We've got the dollar index strengthening on the back of that, up 0.19% to 99.16. Gold down $30.10 an ounce to $42.12.90. Crude oil down 69 cents a barrel on West Texas Intermediate to $59.39. AAA national average for gas prices, though, continuing to slide as those refineries get back up to full speed, down another 0.3 cents overnight to $2.95 and 0.2 on the national average. And so that is what we've got moving in markets today. Big things we're watching for this week. Tomorrow we get the JOLTS report. That's the job openings report. Wednesday we've got a Fed meeting. Thursday we have jobless claims. And then on the earnings side of things, we've got Oracle and Broadcom on Wednesday and Thursday respectively. And so those are going to be exciting for us. Campbell Soup also reporting tomorrow. And yeah, Campbell Soup reporting tomorrow.
Didn't they have some controversy recently?
Yes, it was someone in their company.
It's one of their top executives, yeah.
One of their top executives said something along the lines of, "We only make food for poor people."
Yeah.
Probably shouldn't say that.
Which probably shouldn't say. And by the way, especially in the winter, I go through a whole lot of Campbell's tomato soup with some grilled cheeses on the regular. So
Yeah, there's not really a circumstance you want to say that.
No, you generally don't want to say that.
And in fact, even if you want to express that sentiment as a concern about your overall business model, there are probably better ways to say it. Like, 75% of our sales come from this income demographic. You're in business for a large publicly traded corporation. I think there's just better terms to use.
Yes. It's like you don't often have a CEO being like, no, we're just not going to do it.
Yeah.
We're just not going to do it. Let's talk about stocks. Does that sound good?
Yes.
Chicken or beef? It was Campbell's soup. It was it's
stock
fine.
recipe. I got it.
Piece here in the Bloomberg. What bubble asset managers in risk-on mode stick with stocks?
Yeah, so every month or so, I feel like we come across an article or two where someone somewhere is trying to justify stock levels at these prices. At least that's been the case like this year and the year before. And I guess the concern that I would bring out is every time we read one of these articles, somebody comes up with some new ratio or benchmark you can use to try and prove that stocks aren't that pricey. This time around, you have what's referred to as the excess Cape yield.
The excess Cape yield.
Which,
Where is Cape yield, by the way?
Yeah, it's...
is that near Cape Cod?
No, it's off South Africa.
Oh.
So it uses the S&P 500. We've talked about Cape in terms of price to earnings ratios. So it tries to adjust over a longer period of time for inflation and earnings. And so it uses the S&P 500 companies' average earnings from the past decade and then adjusts both those earnings and the 10-year Treasury yield for inflation. So you're basically trying to figure out how expensive are stocks compared to the current interest rate environment. And they point out that it was really, really... the lower this ratio is, the arguably more expensive stocks are, and they point out that in February it was 1.2%, and now it's closer to 1.7%. I just want to point out, though, that...
Is anyone making their investment decisions based on that?
No, and I'll also point out that there's very few instances where this has been worse than it is right now, and it's pretty much just one, which is the lead up to the dot-com bubble. We've talked about this over and over, and so it's gotten a little better because interest rates have come down since January, but we're still in historically expensive levels, and I don't know, if you're making your investment decision based on a change to the excess Cape yield over the short term, you might be missing some of the bigger picture.
If you want reasons why you can look for stocks and say, hey, maybe they're not actually that expensive, the only one that I think holds weight, and I'm not saying this is go buy stocks or don't. I'm just saying this is one that holds weight with me, at least in terms of trying to justify it. When we look at multiples, they tell you how expensive a stock is based on either profits that have already occurred or profits that are expected to occur.
Yes.
If you believe that we are in a continued secular trend where profit margins should move up, then that is something where, in theory, you can command a higher multiple because you are projecting that corporations are going to grow their share of GDP over time as a result.
And to believe that, don't you kind of have to fundamentally believe that CEOs of major U.S. companies are being conservative in terms of their earning growth estimates?
Not necessarily. I don't think so. But I think what you do have to believe is that, remember, if you look at where the money goes, if corporations are taking a larger share, in theory, it is leaving less for the other two pieces of the pie. One being labor, the other being the government. And so you do wonder, based on kind of the negative sentiment out there, hey, do we reach a point where people just say, guys, enough is enough. We're fed up with this. And this isn't going to work anymore. And typically that's when you see either, labor movements that occur, or in less developed parts of the world, that's where you see, the government thrown out and things like that. That's kind of what happens when labor gets upset, is big changes happen. And so I think if you want the case for yes, stocks are expensive, but maybe that expensiveness is justified. It is that corporate margins have continued to expand at a pretty consistent clip for the last 10, 15 years. You can make a case that it is aided and abetted by the level of consolidation that we have gotten to throughout most of corporate America, and the fact that we don't really seem to care when it comes to antitrust. And we're just kind of cool with it because I don't really know why.
Big company office towers look cool. I'm
It's-
not sure either.
It's just kind of where we are. So I can buy that as a case for, hey.
But if you're going to buy it, you have to thoroughly believe that right now at least it's going to continue, and that probably artificial intelligence is going to be the cause of it.
The counterpoint to that is this probably isn't something that is going to be able to increase forever and may in fact be mean reverting, meaning that, hey, increased corporate profits today may lead to lower profits tomorrow because not profits, but profit margins tomorrow, because when people get upset about, corporate profiteering, they tend to undertake actions to stop that corporate profiteering. And can they mount a, strong enough response to rein that in? I'm not saying this is good or bad. I'm just saying, again, let's talk about a few things that are feeding my mind on this. Zohran Mamdani, mayor of New York City.
Yep.
Talking about reining in profits. President Donald Trump setting levels for profits on different healthcare drugs. These are the things that are actually happening right now. And
yeah, they're getting appeal from both sides.
I think we need to be aware that this is the world that we live in now. And I don't know what it means for corporate power and corporate earnings going forward, but there's a reason why this stuff is being discussed and acted upon now.
Well, yeah, the reading is that it seems to be what people want.
I'm not saying that it's good that people want that.
Yep.
But I'm not going to bury my head in the sand and say it's not happening. It's happening.
Yeah.
Let's take a quick break here. When we come back, we'll answer the question, is AI making us dumb?
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done. Time for trivia here on the Financial Exchange. And on this day in 2019, Paul Volcker passed away at the age of 92. Volcker was one of the most influential economic policymakers in American history, renowned for his tenure as chairman of the Fed. So, trivia question today. Which U.S. president appointed Volcker as chairman of the Fed? Once again, which U.S. president appointed Volcker as chairman of the Fed? Be the fourth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Wall Street Journal with a piece titled, "Is AI Making Us Dumb?" The subheader, "No, the moral panic over technology is an excuse for a failing educational system."
Can't both things be true?
Well, here's the thing. I really struggle in a lot of cases to put the blame purely on new technology because, like, when I was growing up as a kid, like, I heard all this stuff about, like, oh, video games are going to ruin your life, and video games are going to make you dumb, and they're going to make you do all kinds of things. And I've turned out, like, all right-ish, at least, and so, like, I kind of poo-poo a lot of that. There's other places, though, where I think you can look at technology and be like, yep, this is screwing us up, like the smartphone and social media.
Chuck, we just got a text from the text line. It's your mother, and she says she disagrees.
With which part?
The part of you using video games and then turning out to be okay.
I know. It's an ongoing point of contention. But in any case, even with social media and smartphones, the problem, in my opinion, is that social media is not a technology. It's a way of talking, and like we've just done a whole bunch of bad things because we converse that way instead of with actual human beings going forward. Do you want me to dig in further on that?
No. I do agree. Like, I don't think AI is a cause of making us dumb, and I think we're kind of mixing together issues. I do very firmly believe that social media is an addiction for a lot of people. And I don't think that I would call, people addicted to heroin dumb.
No,
I just think
social media is not making us dumber. It is removing our ability to actually have meaningful conversations with other human beings.
Right.
And in turn is making us lonelier, more prone to outrage, and generally unhappier.
On the AI side of things, I do worry that we might eventually get there too, and I think there is a tendency to want to reach for the fast answer rather than using critical thinking. But I'm willing to buy that. Like, are our teaching systems approaches to new and emerging technology the best? No, probably not. And could we be doing a better job of how we implement new technology and, using it as part of the education system rather than trying to block it and then catch people using it and things along those lines? Yeah, I'm also down with that. But, on the other hand, when I hear parents of teenagers who tell me that, like, kids wake up and ask AI what they should do with their day, those are things that concern me a little bit. In the same way that social media usage with a 14-year-old concerns me.
So I think ultimately, no. AI is not making us dumber. It might be revealing our own innate dumbness that's always been present throughout humanity because, like, we're all kind of stupid if, like, we're going to be honest with ourselves.
What I'll say about it is if you are a parent that's out there that's, like, pretty good at policing your kid's social media usage and you're just ignoring the AI side of it, like, I don't know that that's a great policy either. Right? Like, oh, yeah, I don't let my kid use Facebook, but they spend 3 hours a day talking to ChatGPT also seems like a problem to me. And we've got this 20-year history with social media. I hope we have a better approach to AI than we do. And I see no evidence of that, by the way, right? Like, I see zero evidence whatsoever that we are approaching artificial intelligence, this new emerging technology, in a thoughtful way with, guardrails in place to make sure that people and specifically kids don't get hurt. This is kind of an obsession of mine, but we like to cover this over and over again, that Meta, the owner of Facebook, had written policies on what type of romantic interactions a 13-year-old could have with an artificial intelligence. Was it 13-year-old? Mm-hmm. They'd written policies, so they had thought about, like, okay, this is the level of romantic interactions our AI can have with a 13-year-old, rather than saying, hey, that's probably inappropriate for a 13-year-old.
Yes.
So there's a lot of evidence that we have given zero thought as a society to the long-term implications of this new emerging technology that everyone's using.
We've given thoughts to it, just bad thoughts. Again, Meta thought about it. And then was like...
And then they came up with a disgusting policy.
Yes.
So you're right.
Yes. And so, like we've got... The problem isn't usually the technology, it's the humans. And how we decide to implement said technology.
But good news, Jamie Dimon predicts that AI will not dramatically reduce jobs in the next 12 months. So thank you, Jamie.
He's got good track records on this stuff, right?
I just, again, sometimes he tosses something out there where, like, I don't know a lot of people that were calling for AI to dramatically reshape the job market in the next 12 months, but Jamie doesn't think that's going to happen, so I guess I'm happy with that.
Why does Jamie Dimon get interviewed on, like, everything? I'm not, again, really smart guy. The absolute best risk manager in the system.
Here's all I think it is. I think he's just simply willing to answer these questions, whereas other people, for, whatever reason, like, I'm sure Taylor Swift gets asked the exact same questions. And she's like, I don't know. Don't ask me that question. Whereas Jamie Dimon seems to be willing to answer any question that gets tossed his way.
But, like, how come I never hear what Brian Moynihan has to say about anything?
Yeah.
Don't
know. Well, again, because I think Jamie Dimon has built a reputation of answering these questions.
Do you even know who the CEO of Citibank is right now?
I do not. No.
Jane Fraser.
I knew it was a woman. I couldn't remember her name.
Honest question, who is the CEO of Wells Fargo right now? Don't know.
Yeah.
Let's take a quick break here. When we come back, we will give the answer to the trivia question. We do know that. And we've got Wall Street Watch after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Fed meeting week is finally here. Yay. And markets are dipping into negative territory at the moment. Traders are also readying for job openings data due out tomorrow morning, in addition to more tech earnings from the likes of Oracle and Broadcom. Right now, the Dow is down 0.3% or 144 points. S&P 500 is down 0.33% or 22 points. NASDAQ down by 0.2%. Russell 2000 is up nearly 0.2%. 10-year Treasury yield up 4 basis points at 4.182%. And crude oil down over 1.5% lower, trading at $59.15 a barrel. In a hostile takeover bid, Paramount is now offering an all-cash $30 per share deal for all of Warner Brothers, days after Warner agreed to a deal with Netflix. Paramount argues its offer is better for shareholders and more likely to be approved by regulators than the Netflix offer. Paramount stock is rallying 7%, while Netflix shares are dropping by 4%. Meanwhile, we have some acquisition news in the tech sector this morning, after IBM announced it is buying data streaming platform Confluent in a deal worth $11 billion. IBM shares are now up over 1%, while Confluent stock is surging 29%. Elsewhere, according to the information, Microsoft was in talks of moving its custom chips business to Broadcom from Marvell Technology. Marvell stock is down 9% on that news, while Broadcom shares are up over 2%. Berkshire Hathaway announced the departure of investment officer and Geico CEO Todd Combs, who will be joining J.P. Morgan Chase. Berkshire stock is down over 2%. In manufacturer CRH, HVAC company Comfort Systems, and online car retailer Carvana are all seeing gains, following news that all three companies will join the S&P 500 on December 22nd. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question, which U.S. president appointed Paul Volcker as chairman of the Fed? That would be Jimmy Carter. Greg from Fitchburg, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Greg. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Couple questions. Who gave IBM $11 billion? And what's a Confluent? Have you ever heard of that?
It's a data streaming platform, Chuck.
Who are these people?
It's data that streams.
$11 billion? That's a lot of money for a company that,
nobody's ever heard of.
I know that I don't know every company out there, but I've never heard of this one.
Yeah.
IBM, their revenue has dropped from $107 billion a year in early 2012 to $65 billion today.
Yeah, but Chuck, AI.
Did you hear about this?
When you put it that way. Sure. Let's talk about this.
I'm sorry to tease that, but that seems to be the answer to everyone's concerns and questions today. But yeah, Chuck, I mean, AI.
Here's the thing with IBM and AI.
McDonald's quarter was pretty bad. Yeah, Chuck, but AI.
I remember 15 years ago hearing about Watson from IBM.
Yeah.
And how it was going to revolutionize this, that, and everything.
So much for first to market, huh?
So, forgive me if I just look at IBM and AI and just kind of go,
Yeah.
It's a maybe for you. America gets retirement wrong. Can Vanguard fix that? Is a piece in Bloomberg Opinion. What is the opinion of Bloomberg Opinion?
Yes, with annuities.
discuss.
Yeah, I'm not sure I agree with the columnist on
I
this
saw
one,
this
but,
last week, yeah.
So the Vanguard and many other 401k providers are toying with the idea of putting pension-like annuities into retirement plans. So again, some form of income generation that will be a guaranteed form of income generation for retirees at a certain age. And I'm not sure that it's going to get off the ground here, but I do fully understand the desire for it, right? We basically offloaded all Americans from the pension system starting like 50 years ago. And
yeah,
really,
it's been a 45-year migration.
Yeah. Without much of a great plan to replace it, right? Like the 401k came about, but it wasn't really, hey, we're going to use this thing to fully replace pensions. And so I see the desire. I understand why, but there's a bunch of big questions that I have about this. So one, I don't know how putting a product like an annuity into a 401k would work given Americans' propensity to change jobs these days.
And want to take early distributions from 401ks in a lot of cases.
Yeah, like these, if you're not familiar with annuities, we don't have enough time in a 2-hour program to fully educate you, but there's a lot of different flavors, but the main component to them is you are giving up in some way your access to your principal to ensure that you have an income stream in the future.
It's a contract with an insurance company.
And so I just don't know how that fits within today's world of constantly changing jobs. I also just I don't think American consumers are generally good at assessing how their 401ks work now, and trying to add something as complicated as an annuity into it seems like it might be faced with some issues there. And so what I don't like about it is putting all of this on the individual person. There's going to be if it's going to be successful in any meaningful way, there's going to be a boatload of education that's going to need to be done that I don't see happening anywhere in our education system or on the employer side of all of this. So I'm not saying it's coming from a bad place that they want to put annuity. Like I genuinely don't believe that this is all about creating a new revenue source for 401k plans, although that's clearly a contributing factor. But I think that it's not going to go terribly well. One, Americans have a terrible opinion of annuities by and large. Two, it's really complicated.
The other piece on this that I'll be curious to see is what the expense structure looks like. And I'm going to approach this from the opposite perspective that most people do. Vanguard, I think, in general, has been a real positive for the industry in terms of leading the charge to reduce expenses.
Sure.
I think some of the stuff that they are doing now is to the point where it's gratuitous, to the point where it doesn't make a difference for the individual investor, but prevents competition. In that, hey, if you cut a fee on a product from 1% to 0.5%, over a 40-year period, that's a meaningful shift in savings for investors. If you cut an expense ratio from 0.05% to 0.04, that doesn't really improve the overall picture for the person investing in it. Like, it's negligible, but it makes it harder for new competitors to come into the market who might have a better way of doing things. So this is why I kind of wonder where they may go on this, because I do think that when you look at how a lot of annuities tend to be priced, they tend to be pretty steeply priced.
Yep.
And I do think it's one area where,
Vanguard could beat up on that.
If someone could come in and improve the pricing structure there, sure, like I think that's great. But in other parts of the market, I think they may be starting to kind of abuse the market position they hold and preventing more competition rather than encouraging it.
Here's my conclusion overall. Regardless of the success or failure of annuities and retirement plans are about to change, not just because of this. They've been changing quite a bit for the last couple of years. I think they're going to change at a more rapid pace over the next few years. And my assessment is that most Americans aren't going to be prepared for that change. But if you want to be, and if you want to better understand how your current retirement plan actually might work for you in retirement, and all the complications that come along with that, please give the folks at Armstrong Advisory Group a call. You can book your free consultation by calling 800-393-4001. You can go to armstrongadvisory.com to schedule a time for us to call you back. But this is one of the least understood topics that I discuss with clients of mine and other people that I meet with. And so I understand why folks have questions. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Could paper checks be on the way out like the penny? Your thoughts, Michael?
God, I hope so.
Discuss.
I have somebody who is buying a space in a retirement community soon, and they only accept checks.
My dump only accepts checks.
No wires.
You dump.
No electronic funds transfers. Check only.
Wait, your dump only accepts checks?
That's correct.
So no cash.
No cash.
No credit cards.
No credit card.
Checks.
That's right.
For a dump.
That's correct.
That's crazy.
Which they then throw in the dump.
You know, my first job was as a cashier and at a grocery store.
Yeah.
And you'd get one, maybe two people a shift that would come in with a check in order to buy their groceries. And it was always the toughest thing to deal with because, like, there's a whole process for, like, validating it, and it slowed the whole thing down.
No kidding.
And, you know, at that time in my life, I was, I don't know, like 14, 15 years, however old you are when you can, you know, first start legally working. And I was like, okay, like, get rid of these. The older I've gotten, I kind of like writing checks now.
Oh, my God.
I don't go into the grocery store and buy them there. But I don't know, there's something...
They are constant sources of fraud.
Yes.
They are challenging to deal with.
But everything is a constant source of fraud.
Yeah, but, I mean, really low-hanging fruit there for somebody to open your mail, find a check, and just rewrite it. Really easy, especially with AI.
Right, like here is the thing, I guess, is... The real problem with the check is that it has to have your full bank account number on it in order for it to be a real check.
It's just fraught with issues.
You know, there's a real problem from a security perspective.
If blockchain can do one thing for me, it should be able to allow me to make a payment without having to physically write out a check.
The counterpoint is there's also, I now believe, value in the slowness of the check, in that if I realize something's gone wrong...
Yeah.
I can stop payment on it pretty easily.
Fair.
And, like, I kind of value that. Overall, like, where are we going with this? Tucker, can we put this on the board? Will there still be checks in our lifetime?
No, we cannot put that on the board.
We can't put that on the board?
No, that's not how it works.
I don't think they're going anywhere anytime soon.
Agreed.
I think you're going to have them for at least the next 20, 30 years. But after that, it's a hard maybe for me. Let's take a quick break. When we come back, Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. Nobody wants to think about estate taxes or nursing home costs, but if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoy one or all three, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape at visitusvi.com. That's visitusvi.com.
Mike, what do you got for me for Stack Roulette?
A text from a listener. AI is not making us dumb yet, but it will. The example is what is referred to as Google Brain, the phenomenon where people no longer seem to have the ability or desire to remember common things because they'll just look them up. When I was a kid, I remembered everybody's phone number. Now I barely remember my wife's phone number. So I'm going to debate this one. I will acknowledge that I think social media and AI might make us different, but I'm not sure that this one adds up to me, right? Like, I don't remember phone numbers now either. Very rarely can I recall a phone number, but I do remember passwords to some 10 or 15 different websites. I do remember specific apps that I need to use if I want to turn up or down the temperature in my home. Like, I feel like I've just replaced my phone number recall with other types of recall that I didn't used to use. And so I don't like, as a society, like, if I'm sitting with a group of friends and we're asking a question about, something that happened in 1985 and somebody just Googles it and we no longer get to have the fun conversation. But I don't know that that's because we're dumber, I guess is where I'll leave it. And I'm not sure that our ability to recall has also gone away because of these technologies. But interesting thought exercise. I would be interested to see if there's any evidence that our ability to recall information has gone away.
There is evidence out there that our ability to focus has diminished because of smartphones and the reward system associated with notifications of positive reinforcement. And you're always checking your phone to see if something came in.
Yeah.
But I think that's different from recall inherently. I want to talk about online gambling, and not sports gambling, but specifically digital casinos and digital slot machines. And here's the thing. Pennsylvania collected over $1 billion from digital casinos last year, compared to $188 million from digital sportsbook apps.
Sorry, hold on. This is the tax revenue, or this is the
tax revenue?
Oh, wow.
Tax revenue. Pennsylvania's entire state budget is $50 billion, so 2% of their budget for the year came from digital casinos. So I have two feelings on this. The first is, if I'm a resident of Pennsylvania who does not use these online casinos, I'm like, fine, you want to take money from all these people? Fine, have at it. Keep my taxes low. I get that perspective. Unfortunately, the place that I come back to that's more important is, man, the state is literally encouraging gambling addiction to the tune of $1 billion a year in its own residents in order to figure out how to balance its budget without raising taxes on people because they're too cowardly to do so, or cutting services because they're too cowardly to do so. And that really sits badly with me.
Yeah, that's
because I'm willing to bet that $1 billion in taxes from digital casinos, it's probably 5% of Pennsylvania residents that are ending up, putting that in. And it's not the wealthiest 5%.
I was going to say, think about the round trip that happens here is you gamble all your money away on maybe it's not state-sponsored, but in some cases it might be, because the lotteries, for example, are state-sponsored. You gamble all your money away, and the state collects a bunch of revenue, at which point you are forced to go on federal benefits because you're impoverished and have no money. This is a pretty bad system.
Are you, though? Because here's the thing. Most of those systems are based on income. If you have income that's coming in, but you're just spending it gambling, I don't know what you qualify for necessarily.
Eventually Medicaid. I mean, it might take a little while, but you're not going to earn income forever.
Either way, I look at this and the societal implications, the place I get to, the states want the revenue, but they are too chicken to raise taxes or cut services, and so they just end up basically hosing a small portion of their population that can't stop gambling on their phones. And that feels really bad to me. It feels really bad to me. Let's take a quick break for the rest of the day. We'll see you tomorrow with more Financial Exchange.